The auto industry's $47,000 average sticker price is driving a massive market shift, but the commercial credit story behind it will surprise you. Welcome to the Commercial Pulse Update for July 22nd, 2025. The Experian Commercial Pulse report is a bi-weekly snapshot of the US economy and its impact on small businesses. Inflation rose to 2.7% in June, up from 2.4% in May. Core inflation edged up to 2.9%, while food and rent inflation showed mixed results. Rent inflation fell to its lowest level since 2021, while food prices marked their third consecutive monthly increase. The June unemployment rate dipped slightly to 4.1%, with 147,000 jobs added, mostly in state government and healthcare. Wages continued their upward trend, climbing to $31.24 an hour. Business optimism remained high at 98.6, according to the NFIB, and despite persistent uncertainty, small businesses are still signaling confidence in the economy. Consumer sentiment climbed to 60.7, the highest reading since February, though it's still 11% below same time last year. The rebound reflects growing consumer resilience. The May 2025 reading of the Experian Small Business Index climbed to 45.2, a 2-point increase from April. That's a strong rebound following last month's dip, though it remains nearly 10 points lower than 1 year ago. Here's what's driving the improvement. The US economy remains resilient, and at the time of Experian calculating the May index, tariff reductions had eased market anxiety. New business formation remains robust, with 457,000 new businesses launched in June, maintaining a steady pace well above pre-pandemic averages. Stability in startup activity, rising wages, and improving sentiment are keeping the small business environment in that moderate 40 to 60 range, and that signals cautious optimism. Well, if you have checked the sticker price of new cars lately, your heart might skip a beat or two and motivate you to look at used models. Check this out. The producer price index for new car dealers spiked during the pandemic, dramatically increasing the cost of new vehicles. With the average new vehicle price over $47,000, buyers are increasingly turning to used cars priced around $28,000. And that shift has led to longer vehicle ownership, averaging 12.6 years, and surging demand for automotive parts. In fact, manufacturing orders for parts topped $66 billion in May of 2025. And here's where it gets interesting for commercial credit. Used car businesses are seeking more credit, and their credit inquiries are now 20% higher than January of 2021 levels. Card utilization among used vehicle businesses has climbed to 32%, tied more to rising parts costs and inventory needs than liquidity strain. New vehicle dealers are feeling the squeeze. Their 91-plus day delinquencies have nearly doubled, and their risk scores dropped by 4 points since 2022. But while demand is up, credit access is tightening across the board. Commercial credit limits have dropped over 40%, with vehicle and parts wholesale providers seeking the steepest decline, $8,900 losses in average limits. And used cars and aftermarket businesses are holding steady. Lower delinquencies, flat risk scores, and actively seeking credit, while OEMs and dealers are under increasing pressure from high interest rates, low margins, and cautious lenders. And there's a lot more in our study of the auto industry in the latest report. If you found this update helpful, we encourage you to explore and visit our Commercial Insights Hub. Also remember to subscribe to our YouTube channel. And last, remember to stay ahead, stay informed, and we'll catch you on the next one.